Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is November 17th, 2025, and we're diving into the latest earnings report from H World Group, a major player in the global hotel industry. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. H World Group has just released their third quarter results, and there's a lot to unpack, from their revenue growth to their strategic initiatives in the hotel sector.
Revenue and profitability overview. Let's start with the top line. H World Group reported a revenue of RMB 7 billion for the third quarter of 2025, marking an 8.1% increase year over year. John, what are the key drivers behind this growth?
Absolutely. The revenue growth was primarily driven by the expansion of their managed and franchised hotels, which saw a 27.2% increase year over year. This aligns with their asset-light strategy, focusing on expanding their franchise model rather than owning properties outright. Additionally, their net income rose to RMB 1.5 billion, a 15.4% increase from the previous year, supported by strong operating profit growth.
And how did their EBITDA perform this quarter?
The EBITDA for the quarter was RMB 2.5 billion, consistent with the previous quarter, but up from RMB 2.0 billion in the same period last year. This reflects their effective cost management and operational efficiencies.
Operational efficiencies and future outlook. H World Group's operating margin improved to 29.4% this quarter. What factors contributed to this margin expansion?
The margin improvement is largely due to a higher revenue contribution from their managed and franchised business, which is less capital-intensive. This shift is part of their broader strategy to reduce reliance on leased and owned hotels, thereby enhancing profitability.
Looking ahead, what is H World's revenue growth forecast for the next quarter?
For the fourth quarter of 2025, H World expects revenue growth in the range of 2% to 6%, with managed and franchised revenue projected to grow between 17% and 21%. This guidance reflects their confidence in continued network expansion and market share gains.
EPS forecast and analyst expectations. John, analysts had forecasted an EPS of 60 cents for this quarter, but the actual adjusted EPS came in at 0.7 cents. What does this discrepancy tell us?
This significant miss on EPS indicates that while revenue and operational metrics were strong, there might have been unexpected costs or lower than expected margins impacting the bottom line. It's crucial for investors to look at the underlying factors, such as cost structures and one-time expenses, that might have contributed to this variance.
With only one analyst providing the forecast, how should investors interpret this EPS miss?
Given the limited analyst coverage, the forecast might not fully capture the company's complexities. Investors should consider the broader financial health and strategic direction of H World rather than focusing solely on EPS.
CEO Strategic Insights. CEO Jin Hui has been vocal about the company's strategic direction. What insights did he share in this report?
Jin Hui emphasized the robust network expansion, with 749 new hotels opened in the third quarter alone. He reiterated the company's commitment to an asset-light strategy, focusing on high-quality network growth and market share gains. His confidence in the future of China's hospitality sector remains strong, which is a positive signal for investors.
How does this align with their international operations?
Internationally, the legacy DH business saw a 6.4% increase in blended RevPAR, driven by higher occupancy rates. The focus remains on enhancing operations and cost efficiency, which supports their global expansion goals.
Key takeaways. In summary, H World Group has demonstrated solid revenue growth and operational efficiency this quarter, despite missing EPS expectations. Their strategic focus on an asset-light model and network expansion positions them well for future growth. John, any final thoughts?
H World Group's performance this quarter underscores their resilience and strategic foresight. While the EPS miss is notable, the company's overall financial health and growth prospects remain strong. Investors should keep an eye on their execution of the asset-light strategy and international expansion.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on H World's performance in the comments below.